All right, so I like to be able to give everybody, a couple of different resources to be able to start off with. So the first resource is going to be my YouTube channel. So the dope thing about my YouTube channel is for anybody that, misses these calls when I drop them, or you hop on late, or maybe I'm talking too fast, or you just want me to reiterate something. I will be uploading all these, on my YouTube channel. So I've uploaded the past 3 that we've done, and I'm also going to upload this one today. So you guys will have the ability to go back and watch the full session. So my YouTube channel obviously is going to be meant to be able to help you guys. It is full of trading information. I do also, update the setups that I take as far as like the Forex setups that I'm involved in whenever I send them out in my Telegram chat. So, subscribing to the channel, staying up to date, I guarantee you it's definitely going to benefit you. Okay. Now, the next thing I want y'all to be able to focus on is going to be this. It's going to be my Telegram. So my Telegram, well, actually, let me drop my YouTube channel in the chat for anybody that doesn't have it. Obviously, my name right there is Tyree Samuels if you go searching on YouTube. So that's my YouTube channel. I just dropped in the chat. I am also going to be dropping my Telegram link. Okay, so now you have access to both of those. This is actually what my Telegram looks like. So as you guys can see right here, this is going to be my Telegram. So this is what you guys will have access to be able to take advantage of my trade ideas, as well as seeing the updates and seeing me drop the call. So one of the best things that you could do whenever you come to the chat, you want to be able to come up here to, the pinned message, go through this information and then apply. It's pretty much it though. So outside of that, let's go ahead and get started. Right. So we're done with that. They haven't called out a new DeLorean, so we're not gonna be able to do anything with that. So first thing we need to do is go over the trade that we're currently active in, which is going to be GBP JPY. This has not been the prettiest trade, I'm gonna be honest with you, but I mean, it's just a part of the game. So unfortunately, literally ever since this trade is activated, we have been in drawdown literally the entire time. Literally, okay? So for anybody that's wondering, yeah, I'm in drawdown with you, okay? It ain't like, it's like sometimes people don't be thinking you're in the trade with them. Now I'm still in the trade with you, right? Now, this trade has not hit stop loss yet. So the biggest thing that I'm gonna tell you guys, right? And I want you to listen and listen clear. Obviously, this at this point doesn't look great. I mean, a trade that stays in drawdown this long usually isn't the best thing. But I'm gonna be honest, I've had quite a few setups that look like this and they eventually go in my direction. But I'm not saying that's what's gonna happen. But what I am saying is do not allow being in drawdown for longer. Do not allow being in drawdown for longer than what you feel comfortable with force you to manually exit the trade. Because what you're going to do is, I'm going to break it down to you. What you're going to do is you're going to end up manually exiting the trade, losing money, right? The trade might then start going in your direction and something in you is going to be like, damn, I shouldn't have got out. Let me get back in. Then you get back in, right? Say, for instance, this is how the emotions work in the market, right? You get this big ass candy, like, oh shit, it's finna hit my stop loss. I'm gonna just get out. Then it starts doing this and then it drops. You're like, okay, bet I'm finna get back in. It hits your entry and then pulls back again. You're like, fuck, I shouldn't have got back in. So now you've lost money multiple times in a trade that never even hit your stop loss. And I'm saying this because I know how people are, right? This trade has been in drawdown for 16 hours. So every time you've checked your phone since you've been in the trade, you've been in negative. So the main thing I want to be able to tell you guys, which is why I'm showing you guys this setup, hold your trade, hold your trade, hold your trade. Okay. It has nothing to do with my trades. I would just strongly recommend, if you're going to feel comfortable with risking money and getting into a trade, feel comfortable holding it, hitting your stop loss. Okay. Manual exiting is not something we will practice. You'll never see me say manual exit a trade. So it's either going to, be a break even, take profit, or stop loss. So at this point, yeah, obviously, I'm not ecstatic about it, but at the same time, it has not hit our stop loss. So we technically have not lost any money yet. Okay. I'm gonna repeat that one more time. We technically have not lost any money yet. So I just really need y'all to be able to understand that, grasp. I almost hurt myself saying that. Grasp that, grasp that. And I just want y'all to be able to comprehend, it's just a part of the game. So I want you to hold your trade. I want you to be confident as you're holding the trade. And yeah, that's pretty much it. So with that being said, like I said, GBP JPY is still currently, active. And it's not really too much we need to talk about that because we broke this trade down. No, we actually didn't. Because I didn't call this out yesterday. So I actually do need to break this down. My bad. So yeah, let me break this down. I mean, hopefully it does drop. It is showing signs that maybe it wants to eventually drop. Who knows? It has pulled back a couple different times. But at the end of the day, we just gonna let it rock out. So, give me 1 second, guys. Give me 1 second. Hold up, hold up. Let's see. Was that? Okay. My bad. Give me 1 second. Just need to do something on my phone real quick. All right, bet. My bad. I apologize. So yeah, so like I said, this is going to be a trade setup that we're still currently in. So let me actually go ahead and break this down for you guys in the typical fashion that we normally do, right? All right, cool. All right, bet. So like I said, right? God forbid that any of y'all have already gotten out this trade, okay? Because what could very well happen is we might come to this setup. We might come back tomorrow and this trade might just fall off the sky. Some of y'all that may have been like, man, I'm gonna just get out. You gonna be mad, okay? So these are some of the things that you're gonna have to deal with in trading. You might be in drawdown way longer than what you feel comfortable, but if it hasn't hit stop loss, don't allow yourself to lose money because you're tired of being in drawdown, okay? So with this setup, basically what I want to be able to go over is the same thing that we always go over. So you guys already know, if you're getting on these calls enough, we're going to start off on a 1 hour time frame, and then we're going to start, breaking down everything and basically understanding what we're saying and form a bias so we know what direction we want to be able to trade in. So the first thing I'm going to do is I'm going to use my replay tool to be able to I'll just do where we were yesterday. So where we were when I was looking at this yesterday was somewhere in here. It was somewhere in here. So from the 1 hour time frame, we can obviously see the overall structure of the market is going to be bearish as hell, literally bearish as hell. So from the peak all the way down to the low, it was about almost 1,000 pip drop. Okay. Now this was over the course of about a month and a half, give or take. So the market has been dropping very, very aggressively since October 20th. Okay. Now the thing that we wanted to be able to see is, are we going to trade with the overall trend, or were we looking for a reversal? So I was actually looking at trading with the overall trend, and I'm gonna tell you why. All right. So the first thing that caught my eye, right, on this 1 hour time frame is going to be this fat, gigantic imbalance that you have peaking above all of these highs that it looks like the market swept. Looks like the market swept this. Looks like the market came and swept this. Looks like the market came and swept this. Okay. So it looks like the market came and took a lot of stop losses and ate up a lot of money. Okay. So this candle could have some sort of, significance that we can possibly take advantage of. And that's basically what I want to be able to focus on. Okay. So from understanding that, the next thing I want to be able to show you guys is going to be using our fib. So what I want to show you is, if we go to a higher time frame, the thing that you always want to be able to do is you want to be able to make everything make sense. So I want to make it make sense that it makes sense that I'm doing too much. I want to make it make sense as far as taking a sell, right? I was trying to say too many things. So the thing that you want to do is, whenever you're looking to use your fib, you want to make sure you find the area to where the market initially gave the impulse move. Okay, let's check to see. They did send out a DeLorean. That looks like boo boo. Oh, that's USD. I don't even trade exotics. Okay, cool. So we want to be able to start from where the impulse move initiated. So if you guys look up here, right, you can see these big body candles. This is on a 4 hour time frame. So this initially is where this move started from. So I can actually take my fib from this high to this low, right? And remember, the purpose of using the fib is to see, has the market retraced deep enough for it to make sense for you to take a continuation. Okay. So it has. Remember, I would just like to see the market pull back anywhere within the 61.8 to the 88.6. And that's exactly what we got. So from understanding that, the next thing that I really want to be able to focus on is going to be, my indicator. So the thing that I always talk to you guys about is going to be, you know, the RSI. So the RSI is one of my favorite indicators. Now, the thing that I always teach you guys about is understanding the extremes, right? So as I always repeat every single call, you want to focus on a white line. Whenever this white line gets outside of the purple box, that basically means it potentially, it's not a guarantee, it potentially could be on and popping, okay? It could potentially be on and popping. Why do I say that? Now, the concept of this is whenever the white line escapes out the box, it means the direction it's going at the time it left the purple box, the market is getting exhausted and it's becoming weaker in that direction. So if the white line went outside the purple box to the upside, that means the upside momentum is becoming weak. It is becoming, you know, possibly, nah, that's not, I didn't word that right. It possibly is about to give you a sign that the market is about to weaken and possibly give a reversal. So I like to be able to utilize the RSI so that I can have the confidence to know, okay, the market is actually weakening and I'm not just imagining this. The market is actually weakening. I'm not just hoping that that's what it's doing. I know for a fact that's what's happening because this is the purpose that the RSI serves, right? Now, what's the other thing I always tell you guys about, right? I always tell you guys about what? Divergence, okay? Divergence is a very, very powerful tool. Now, the way that I like to show you guys divergence is going to be simple. The thing that I like to do is I like to be able to go to the candles. I like to change it to the line chart. That makes it a lot easier for everybody to be able to see, you know, in perfect unison. Now these basically match up. Now, I don't know if you guys can see the divergence, okay? But I can. So this right here, it's very subtle, right? Very subtle. Okay, extremely subtle. This is barely going up, right? This might not even, you know, be like the best. It's definitely not the best divergence. It's technically divergence in a sense, right? Because if you look at it, this area is all the way up here. And the fact that the RSI is back at basically the same spot, this market is nowhere near here. Okay. So that has to mean something. Okay. Why is the market all the way back up here, but it's nowhere near this high that just got created? Okay. That might mean that it is continuing to get weaker, right? So I'm not going to even classify that as divergence because it's a pretty bad example of divergence. So we're not even going to utilize that. So for this example, we're really just going to hone in on the extremes being hit, all right? Which, as I told you guys, this is basically one of the top things that I personally use every time I take a setup: extremes and divergence, all right? Now from here, I always tell you guys, right? It's very, very simple. The only thing I'm going to do is once I've identified my point of emphasis, I just need to find an engulfing candle so that I can look for a possibility to take an entry. So all I do is I usually start working my way up from the 1 hour time frame. And I'm just going to be looking to identify a candle that I like, that I feel confident to be able to take a potential setup on. So initially what you guys see right here, right, is going to be this candle. Okay, that's on the 3 hour. We then go to the 4 hour. You see it's basically about the same size. And then we get to the 5 hour. Now, me personally, I ended up sticking with the 5 hour. You can see that this technically is still an engulfing candle. Might throw you off a little bit if you don't get close enough. It has to be an engulfing candle because if this is a bearish engulfing candle, we literally just need the red candle to be bigger than the green one. Not by a lot, barely, as you can see. It's barely bigger than this green one, but barely is good enough. That's still an engulfing candle. So for me, right, you guys know the next thing I'm finna do, okay? It's two different things I'm finna do. The first thing I'm finna do is I'm finna look for the 50% of this candle. Now, why am I looking for the 50% of this candle? The 50% of this candle is going to be the equilibrium. It's also going to serve as, you know, a sweet spot, a sensitive spot. I call it a ticklish spot, okay? So this is an area that the market a lot of times could pull back to. And if it does, obviously assuming that you have the right bias, it's going to give you the best risk to reward. It's going to give you the smallest stop loss. It's going to give you the largest pip gain, okay? But understand the market does not always have to pull all the way back to the 50%, right? So with knowing that information, what I like to be able to do is I like to be able to show you guys a zone. Now, one of the cool things about trading is you don't always have to have an exact area, but if you have a zone, that can work really nicely as well too. So where did I get this zone from? It's pretty simple. This zone is going to come from the 50% down to the opening of this candle. So within the zone, this is where I would potentially look for opportunities to take a short on this setup, okay? Now, to make matters even better, there's actually another fib that I want to be able to use, which is the one that we initially used. which is going to be the regular one. Okay. Now, the purpose of using this fib is to give us a better overall understanding of where we might look for an exact entry. So if you know anything about when I send out my trades, I'm not sending out a zone. I usually don't do a lot of market execution. I'm sending a buy limit or sell limit, which means I need an exact entry. How do I get that entry? Usually based off the Fibonacci. Okay. So the way that I would usually play this, right, is any fib within this zone that I just created could serve as an entry. So depending on the person, you might go with the 61.8. You might go with the 71%. I don't know what you're going to go for, okay? Either one of these is valid because both of these fibs are within the zone. So this is how you can actually go about figuring out where you want to enter by utilizing the fib retracement, okay? Now, this is the thing I want to be able to show you guys that comes with me putting in the time in the market, me putting in the time with back testing, me putting in the time with taking a lot of L's so that, I know what works and what doesn't work. I personally, and I recommend that all you guys do this. I want you guys to do this. If you have not done this, I want you to start working on this immediately. You need to determine what is your max stop loss. I'm gonna repeat that one more time. You need to determine what is your max stop loss. Okay. If you're a person that's like, I don't want to have a stop loss more than 20 pips, cool. You need to figure out a strategy that's going to be effective, that's going to allow you to take a setup to where you're never going to go past a 20 pip stop loss, right? For me, my stop loss maximum is 40 pips, okay? Primarily because I trade on higher time frames. So anything less than 40 pips is going to be kind of hard for me to take, a good amount of these situations. 30 pips I could get away with, but I'm going to still miss out on a lot of opportunities, okay? 40 pips was my sweet spot. I was at 50 pips at one point in time, but I was like, you know what? 50 pips is kind of a lot. And then I got to 40 pips, and that's my sweet spot, okay? So I'm saying all that to say, what I'm about to show you guys is how I learned from my back testing how I can finesse an entry, even if where I would like to get in is not going to give me a small enough stop loss. So I'm saying all that to say, let's say, for instance, I want to go with the 61% entry, right? You're like, okay, you want to go with the lowest entry, just to make sure you get in the trade. You don't want to have, it maybe doesn't pull back and then you miss the whole setup. I get it, right? So let's just say we're using the 61.8, right? If I were to take my short position tool, right, line it up, let's make it perfect. Excuse me. Line it up, right? Pull this up here. Okay. All right. So this is going to be, I don't have to do anything. So as you guys can see, that's 118 pip stop loss, right? There's no way in hell I could take this trade from here based off of my personal rules, knowing I have to have a 40 pip stop loss max. Okay. So you might be like, okay, Tyree, process of elimination. Well, what happens if you try to move it up a little bit to the 71%? Does that then give you the stop loss that you want? No, it doesn't. That's still a 90 pip stop loss. So at this point, some of y'all might be like, well, damn, I guess you just gonna have to throw this trade in the trash. Obviously, that's not what we did because we're in the trade. So what I'm about to show you guys is how I was able to figure out a way to still get in opportunities, even though the initial entry that I would like to take is going to be too big of a stop loss. This is how simple this is, ladies and gentlemen. At this point, all I would literally do is move my entry until I get a 40 pip stop loss. And then that's all she wrote. It's literally that simple. And that's how I got my entry. So keep in mind, on the normal setup, which you guys have seen me do quite a few times, because I see a few people that have been on most of my calls, I'm going to take my entry based off of this because most of these entries based off of what I'm showing you is going to give me a stop loss smaller than 40 pips. But in the event that the entry I would like to take does not give me a stop loss small enough, I'm just going to basically move my entry until I get a 40 pip stop loss. Okay. Let me get you guys to type a 2 in the chat if what I just explained made sense. Okay. Let me get to the type of 2 in the chat if what I just explained made sense. So as I was saying, if I were to use the entries based off of the way that I've been teaching you guys, my stop loss would be bigger than what I feel comfortable doing. So in order to not feel like I have to miss out on the entire setup, I'm just going to move my entry until I get a 40 pip stop loss. But you also have to understand, I don't usually expect the market to pull back this deep in general. So it will be some situations to where whenever I force my entry like this, I may just still miss the whole setup altogether because the market is just not going to pull back that far. But if it does pull back that far, I'm going to have a way better risk to reward than all my other setups because this is a way deeper retracement than what I would normally look for. So it's really a win-win situation. You feel what I'm saying? The stop loss is bigger than what I would normally use, but the risk to reward is going to be a lot bigger than what I would normally get because the retracement is a lot deeper than what I would normally look for. Okay. So all in all, as you guys see, I don't really need to like let that play. You guys basically see what ended up happening. So yeah, this is probably about to just go ahead and hit stop loss. So like I said, this is just going to be an example of, one of those opportunities to where it's just not going in our direction. I'm not going to speak that into existence. Even I ain't gonna lie. A trade that's been in drawdown for 16 hours, it doesn't always end well. So, we're going to stay positive, but this is why I always tell you guys, risk to reward rules all. The biggest thing that I learned in trading, let me ask y'all a question. I want y'all to type this in the chat. What percentage do you think you need to be in order to be percentage? So like, so let me reword this. If I'm a 90% accurate trader, that obviously means I win 9 out of 10 trades. Okay. What percent do you think you need to maintain minimum in order to be a profitable trader? Do you think you need to win 10%, 20%, 30%, 40%? What percent do you think you need to win in order to be a profitable trader? Right? Profitable literally just means you're making money and not losing money. Okay. So we got one person that says 70. Don't be shy. We got 8 people on the call. Let's get 8 answers in the chat. What percent do you think you need to be in order to be a profitable trader? Okay. We got 70%, 75, more than 50. Okay. Anybody else? We got 3 people. Anybody else? We got a few more people on the call. Don't be shy now. Okay. All right. So we got a few of y'all that answered. I'm about to fuck y'all up. Right? I'm about to fuck y'all up. 30 to 40% is all you need in the market to be a profitable trader. I'm going to repeat that one more time. You can go fact check me because what I'm saying, I heard from people that are 30 to 40% accurate traders. So it ain't like I just made this up, right? You only need to be a 30 to 40% accurate trader in order to be a consistently profitable trader. Now, keep in mind, that is only assuming that you have a good risk to reward, right? If all your risk to reward setups are 1-to-1, then obviously there's no way in hell you're going to be profitable if you only win 3 to 4 out of 10 trades. Okay. But the logic of it is if your risk to reward is always at least a 2 or 3 to 1, you can be a 30 to 40% accurate trader and consistently win. And if you guys look at all my setups time and time again, every time we take a trade, we're usually going to make back at least 2 to 1, 3 to 1, means we're going to make back double or triple what we're risking. So I can lose a trade or two and then go make all the money back with one trade, right? Think about how dope it is to lose 2 to 3 trades in a row, and I can literally go make all the money back in one trade. Damn, I kind of like this. What's that, 80 cat? Let's look at 80 cat. 80 cat. I need to go ahead and make a video for this. What's that, 15 minutes? Let's see what this looks like. That actually doesn't look bad. I don't know about that. Yeah, we're not gonna take that. We're not gonna take that. Yeah, we're not gonna take that. One thing I'll just say, even though I'm not gonna go too deep into this because it's a whole different strategy, and I don't want to sit here and try to explain this because I'm gonna get off track. Whenever you notice that if you scroll to the left and you can't really see anything else, that might mean the market I mean, the market could just push higher, but I don't like trading when I can't see anything else to the left. Like if I can only see this right here, that might mean it might be getting ready to sell off. Like this easily could be a formation that gets ready to sell off. It does look good though. I'm not gonna lie. I could just be overthinking it. more than like, I'm probably just gonna pass this up, especially if it doesn't happen in this first candle, which it doesn't look like it's gonna do. Let me see what this would even look like. My bad, y'all, for getting sidetracked. Hold on. Let's see. I'm not officially calling this out, so don't nobody do anything. I haven't done anything yet. I'm just literally marking it up. I know some people be having the trigger fingers. Yeah, it's not gonna come back anyway, so it don't even matter. Oh yeah, okay. It don't even matter. It's gone. It didn't even give the pullback that we would have wanted. Okay, that makes it easier for me to not take it. It's not even gonna give us the ability to get in anyway. Okay, cool. No tripping. Not even tripping on that. Just go ahead and get rid of that. Just makes my life a lot easier. I don't even have to second guess because it's not gonna give us an entry anyway. All right, cool. I'm not tripping off that. So let's go back to what we was talking about, which was, what were we talking about? What were we just talking? Oh, GBP JPY. Yeah. So like I said, you know, the setups that we take, I'm gonna show you guys an example, right? So whenever we take setups, this is what I want y'all to start paying attention to, because not everybody catches this. Whenever I send out my setups, when it says RR, that means risk reward. Okay. 1 to 2, 1 to 4, 1 to 6. That basically means 2 times what you're risking, 4 times what you're risking, 6 times what you're risking. Now, obviously, the thing that has to be understood is whenever you're taking partials and things like that, by the time it hits the second and third take profit, you're not technically still getting 4 times and 6 times the amount. I don't know if people actually comprehend that, but you know, that's how it works. Because obviously, if you're taking partials, it's not going to be 4 times the original amount because it's no longer the original amount. So you kind of have to understand all of that when it goes into it. But the concept of it is you are going to be making back double, triple, quadruple what you're risking every time you take a trade and it goes in your direction. So I can go lose 2, 3 trades in a row, which I do not do, right? Y'all have not seen me lose no 2, 3 trades in a row. I haven't even lost. I haven't even lost 2 trades in a row since I started back sending out setups. But the goal of it is if I do lose 2 trades in a row, I'm not going to trip because I know the third trade that I take, if it goes in my direction, I can make the money back from the 2 losses and then some. So that is why, guys, by definition, I think the technical number is 30%. You can be a profitable trader winning 30% of your trades, meaning you win 3 out of 10, but you have to have a risk to reward of at least a 1 to 3. Okay, which is not crazy. 1 to 2, 1 to 3 is pretty standard, to be honest with you. Anything past like a 1 to 3 is it's a little bit more, but 1 to 2, 1 to 3 is pretty common. So yeah, so that's basically something I want to be able to pay attention to. So every time y'all see me see a setup, start paying attention to this risk to reward thing on the side. That's how you guys can start potentially give me 1 second. Let's see. Oh, my bad. I'm on my phone. I had a message that popped up that just threw me off. Hold on, my bad. I was like, what the hell? All right, get that out of there. Get that out of there. All right, but all right, my bad. But yeah, so these are the things that you guys want to be able to start paying attention to. So let me go ahead and move that back out the way. So as you guys see, AED Chef did activate. Yeah, so GBP JPY is definitely about to go hit stop loss. So like I said, it's just one of those things to where there's nothing you could do. And honestly, this is going to be one of those examples to where, as I tell people, this is where you would like to eventually get to in your trading. You're just going to take losses, and it's not necessarily anything you could have done differently. The only thing you could have done differently is just not taking a trade. But if it's a trade that you like, why would you not take it? So this is literally just an example of an L I'm just going to have to hold on to. In retrospect, there's nothing I would have done differently. You know, I like the setup. I still like the setup. It just didn't go in our favor. So yeah, it's definitely about to go hit stop loss. So is what it is. It's just a part of the game. But the main thing I want you guys to know, yep, it just hit stop loss. All right, cool. So let me go ahead and report that. My biggest thing in trading is I just want to be a transparent person. It's just a lot of people that don't ever show you their losses. Like if you ever notice when you see people post their profits on Instagram and Facebook and Snapchat, there's a reason why you only see them post when they're winning. Never get that confused with, oh, they must not lose. No, they're clearly just only showing you whenever they win. Okay. So I just want to be one of those people that showed you guys it's okay to lose because everybody loses. And it's also okay to show people that you lost. Okay. Don't feel weird about it because I know I don't consistently lose. So it's not really anything I'm tripping about. But on top of that, I want you guys to know I'm also going to be dropping all these to my YouTube channel. So every time I win a trade, every time I lose a trade, I'm going to upload it to my YouTube channel because there's not that many people doing that. So let me go ahead and update SL hit negative what 48? No, negative 40. SL hit negative 40. Actually, let me do this on my phone. I'm trying to do this on the laptop. Hold on, give me 1 second, y'all, so I can update this. And AED Chef did activate, so we'll see how that plays out. Maybe that'll be the trade that gets us our money back. Who knows? We'll see. Let me see. All right, GBP JPY SL hit negative 40. All right. And I bet. Cool. So that's just a part of the game. I'm gonna leave that set up there so I can let me put this in a different, let me put this in my YouTube folder. The folder I need to make YouTube videos for. My pink folder. All right, so I need to make a YouTube video for all those. All right, cool. So AED Chef, we are currently in AED Chef, so we'll just see how that plays out. So I just, obviously just go ahead and talk about AED Chef. Do we have a lot to talk about tonight? Not really. I'm still kind of mad about this. This would have been a great setup. It just didn't activate, and I don't even feel like talking about it. I'm gonna just leave it on this chart just in case maybe it pulls back one more time, but I don't know. So I'm not gonna waste my time talking about that. This is a setup we sent out earlier in the week, but ended up saying deleted because it just didn't activate. It still could possibly pull back later, but at this point, it might just pull back into this move and just keep dropping. I don't know. So as of right now, we'll really just talk about AUD Chef and AUD. AUD USD just kept going up. Okay. So that might not actually pull back. All right. NZD CAD, USD JPY, USD Chef. Let me flip through these pairs real quick. I actually didn't check none of this stuff before I got on the call. But it looks like we're just we're not even gonna be talking about AUD USD. So I guess we're only gonna be talking about AUD Chef tonight. So this will probably be a shorter call tonight. I need to make a YouTube video for that. I already got that pink. That's AUD Chef. We're in that. CAD CHF. Don't like it. Don't like it. Euro USD. Euro JPY. I can just erase this. Euro CAD. What Euro CAD doing? Nothing interesting. Euro NZD. Need to make a YouTube video for that. Euro AUD is just dropping. Euro Chef. Not really doing anything exciting. Euro GBP. GBP USD is going up. GBP NZD going down. GBP Chef. GBP AUD. GBP CAD. GBP JPY. So yeah, that hit stop loss. Let me hold on to that. USD JPY. Gotta wait for that to go a lot higher. CHF JPY. So look, this is like examples of, I'll show you guys like an example. So this is like an example of something that could be getting ready to do something. So notice But like I said, at this point, I mean, there's no engulfing candle, but these are like the things that I start looking for. So if you guys notice, we do have divergence happening. So notice from here to here, it's going up. From here to here, it's clearly going down. So that could be something showing that the market might be getting ready to, fall out the sky. But as of right now, there's no, no impulse move, no engulfing candle. So there's no entry. So this is like what I mean whenever I say, I mean, the confirmation could be there, but if there's no candle for me to get in, I can't get in. I just got to wait. So that's like an example just to be able to show you guys of something that could be getting ready to happen, later on this week, later on in the day, or what have you. So something else I have marked up that I didn't take. So let me remove that. NZD Chef. I also marked this up but didn't take it. I'm gonna just erase that too. NZD USD, what you looking like? Excuse me. My bad, y'all. NZD CAD. Oh my God, that's probably never gonna come back. And then look at the USD pairs. Gold ain't showing nothing too crazy. USD Chef broke my heart. CAD, USD CAD. Anything? Nah. All right. Yeah, so guys, I guess it's gonna be a short call tonight. So we're literally only gonna be talking about AUD Chef. Yeah, that's pretty much it. So we'll basically just go over AUD Chef and then we'll just call it a night from there. Yeah, that's pretty much it. I was trying to think of something else to say, but I have nothing. So all right, let's go ahead and dive into AUD Chef. Euro USD. What about it? What about it? Gotta let me know what you want with Euro USD. If you're asking me to like look at it or something, you'd have to kind of let me know like what you want to see, because maybe you see something that you like, but from like how I like to trade, I personally don't see a setup for my style as of yet. So I'm not exactly sure. December 16th, 1 hour candle. What are you talking about? This right here? Is this what you're talking about? This candle right here? Let me know in the chat. I don't know if this is what you're talking about. Has to be. Is this what you're talking about right here? Let me know in the chat. Who is that? Jordan? Let me know in the chat. Is this what you're referencing right here? Let me know. Holla at your boy. Well, as I'm holding on, I'm gonna just go ahead and go into AD Chef. So type that in the chat whenever you get a chance. I'm gonna just go ahead and move forward. Oh, I'm gonna be honest, I ain't finna do all that. So I personally don't see anything that I like, so I'm not trying to disregard what you're saying, but if I don't see anything that I like, it's no reason for me to like dive deeper into it. But the thing I will tell you is what I was always told: if you feel confident about the setup, take it, bro. Take it. One thing I learned a long time ago, this is what changed how I felt emotionally about people commenting on my setups. I'll never forget. I got on a go live session. I sent the setup in the chat. It was two educators on the call. They literally both bust out laughing because I was like, ha, that's literally what happened. The recording, I don't remember what the date was, but the next day I went back and rewatched the recording again. I'm like, these fools really laughed at me. You want to know what's crazy? They laughed at my setup. These were go live educators, bro. It almost fucked me up. Like, man, I'm like, why is this niggas laughing like this? Like, you ain't got to do all that. And the trade ended up going exactly in my direction. You want to know what happened? The next day, I ended up getting back on one of their sessions. I dropped the screenshot of my trade hitting my targets, and I was like, you know what? We were wrong. He was like, because there was only one of them this time. I was like, you know what? You was right. I was wrong. And from that point, I was like, it doesn't matter what anybody has to say about my setup. If I agree with it, that's the only thing that matters. So that's what I would tell to you. So it doesn't matter if I do or don't agree with whatever you're looking at on the 1 hour on Euro USD. If you like it, bro, mark that bitch up and take it with all the confidence in the world. That's the best advice I can give. Don't let anybody deter you. Don't let anybody sway your opinion. Like, nobody can sway my opinion on my setup. Somebody could be like, I don't think it's gonna do this. Like, bro, I don't give a fuck what you think. Like, this is what I think it's finna do. So I'm rocking with it. Okay. But I appreciate you for getting on my calls, Jordan. I appreciate you for always plugging out. I do recognize you. So keep doing what you're doing, my brother. If anything, bro, it'll be a lot easier if you just mark it up and send it to me. I don't know if you're at a laptop, but kind of like on Go Live, you trying to direct me, telling me what I'm supposed to look for is a lot harder than if you send me the link for your chart. You get what I'm saying? So if you mark it up on your laptop and drop the link of the chart in the chat, I'll pull it up so we can look at it. But it is a little difficult, you know, trying to have me navigate figuring out. So yeah, if you do something like that, I'm open to it. And that goes for all y'all. So as y'all start getting on these calls, and like I said, it's not about me agreeing or disagreeing with y'all setup. So don't drop a setup and then feel some type of way if I don't. That's not what this is about. Okay. It's just about dropping it, having confidence. Cause I drop my setup in the chat. The educators don't always agree. I'll get on John Dollery session, Starboy session. They're not just guaranteed to agree to my setup just because I dropped it in the chat, but that's not the point. The point is to get a little criticism. The criticism is not going to sway my opinion, but I like to hear it because I'm still learning. You feel me? Bet. Let's see what we got. My boy done dropped it in the chat. Let's see. Let's see. All right, this is pretty cool. I haven't actually done this before. Looking at other people's charts. I feel like a real educator now. I ain't gonna lie, my laptop has been moving a little slow since I updated this joint. I'm gonna put this on my other screen because I have okay, here we go. I'll just go let it load up first before I pull it back. And my laptop is moving dumb, so I might have to get this bitch cleaned at Best Buy. Okay, cool. Come on. I bet. Let's see. Oh, okay. Yeah. I'm not gonna lie, I actually do like that, bro. It doesn't necessarily mean that I'm gonna take it myself, but what I will tell you is I do like this. I didn't know that that's what you're. Yeah, I like that, bro. That makes a lot of sense. You got the 1 hour candle, you know, above the highs, probably swept some liquidity right here. Yeah, the market give an impulse move back. You had a lot of choppiness. It came all the way back and yeah, it might drop. And honestly, you're not the only person looking for this sell. It's a few people looking for this sell in this area on Euro USD. But like I said, this is just not my personal style as far as what I look at, but I definitely do see what you're looking for. And I think that makes a lot of sense, bro. Shout out to you. Shout out to my boy Jordan. Yeah. So like I said, so moving forward, any of y'all, Jordan too, if y'all want to be able to drop markups, you don't have to ask, you just drop it and then I'll check it and pull it up. Like I said, I'm not gonna sit here and act like I'm gonna just, you know, agree with everything y'all saying because I would be fake, but literally what I just said, I'm not gonna take this myself, but that doesn't mean I can't agree with it. And that's the thing y'all gotta understand. You don't have to take something with your own money to agree with it. I think people get that confused. But yeah, I like that, bro. Shout out to you, Jordan. Good job, bro. I really do actually like that setup. So let's actually go ahead and finish it off. Not saying we're finna hop off. I'm just saying let's go ahead and finish it off with AUD Chef. So I'm finna hop on this session after we get off. So hopefully I'll hop on this session as well too. These are the guys that I like to be able to get on. So I'm gonna tap into that whenever we hop off this session. Excuse me. All right, so let's go over AUD Chef. So AUD Chef. The main reason why I'm taking AUD Chef because I just feel as though this market possibly could pull back deeper before it continues to go higher. I could be wrong. I was already wrong once today. I could be wrong again, but just like in the NBA, shooters shoot, traders trade, man. I'm gonna keep trading. Okay. So with AUD Chef, basically what I was looking at for the most part is, you know, I'm just looking for, you know, another continuation. So basically, as you guys can see, the market has been trending down. Like there's literally no signs of upward momentum. The market has literally just been crashing down to the floor. We had this gigantic impulsive move that left all this imbalance over here, which the market did react to, as you guys see. The market did react in this imbalance, which is another thing that I was looking at as far as like a confirmation. So like if I go to a higher time frame, you guys can see that this market actually already hit and dipped into the imbalance. So that was one thing that I was looking at. I'm not gonna lie to y'all. I gotta be honest. I might just get out of this just because I How much drawdown are we in? Because I'm gonna be real. Now that I'm looking at this setup going over it, I'm not gonna lie. It's not necessarily just like my favorite setup. Yeah, we're not really in any drawdown. Hold on, let me, before I start breaking this down, nah, I ain't gonna do that. I'm gonna just keep it. I don't want to go against what I already originally did. I'm just thinking too hard at this point. Yeah, let me just chill. It's straight. Let's see. What do the rest of the AEDs look like? Are they all bullish? AEDs are bullish as hell right now too. Huh. I'm gonna just keep it. I'm really just overthinking. Let me stop doing that. All right, let me just go ahead and finish breaking this down. Like, I mean, it's like anything else. If it hits stop loss, it hits stop loss. I'm just like thinking too hard. So yeah, let's go back into breaking down the setup real quick. Like I said, I'm human, y'all. So it's, everything I'm saying, I'm really talking out loud, but it's everybody's human. You second guess yourself sometimes, blah, 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 et cetera, et cetera. But yeah, so I really just threw myself off by doing all that thinking. So basically, since this market is an overall downtrend, right? We could use the same concept to where last time how I showed you guys, we could take the fib from the last impulsive move to the low to see if we had a deep retracement. We have. So we've already gotten a retracement within the fib. The market reacted. It's now pulling back. Now, the next thing that we can also look at is obviously the RSI. So with the RSI, we can see that this market ended up coming into the extremes here. You can also see a couple times over here, right? The extremes are being hit. The market continues to move higher though. So it could possibly be momentum getting ready to shift. It could possibly be it's going to continue going up. We have yet to know. But what I do know is this impulsive move to the upside has not really given a deep retracement yet. That's really one of the things I'm also looking at. So the same way I showed you guys from here to here, this pulled back into the zone. From here to here, this has not pulled back into the zone. So keep in mind, a market doesn't actually have to pull all the way back into the zone, because at the end of the day, the fib is something that we're looking at. The market doesn't give the market don't give a damn about your 61.8, 88.6. Okay. So what I would like to see is potentially something like this. If the market is going to continue going higher, I like to be able to take advantage of maybe this sell-off to come back into the retracement of this fib before it continues higher. Because basically this does actually look like it's about to start being an uptrend, because we did have a structure break over here, but I haven't had the retracement that I necessarily wanted. So that's pretty much what I would like to see. Now, the next thing that we'd obviously be looking for is, basically our candle of interest. So as I started flipping through these time frames, I ended up coming across the 7-hour. And as you guys can see right here, this big ass 7-hour candle. Like I said, this 7-hour candle swept these highs. These were literally equal highs, right? Relatively equal highs, swept it. At the same time, it also dipped into an imbalance, right? Also dipped into an imbalance. So you had a liquidity sweep of equal highs. You also had an imbalance being dipped into. Now, with understanding all that, the next step is pretty straightforward. You guys know I'm going to take the 50% of this candle, right? Bam, bam. So I'm going to take the 50% of this candle. Okay, just like that. And then we have so much space down here. You know what I'm saying? And the market's been trending down. Like, break of structure, you know what I'm saying? So it makes a lot of sense as far as, a possibility for a sell. Even though I don't know if it's gonna break this low, I just want a retracement in this move. But I mean, it makes a lot of sense to look for the sell overall, but you just never know. So we got the 50%, right? What's the next thing we're gonna do? Now we're gonna take the other fib from the high to the low. Bam. All right. And as you guys can see, the 71% is where I actually got my entry, which was, no, it wasn't. It was probably up here because I think the stop loss would have been too big down here. Where did I get my entry? Yeah, I would have moved it up because the stop loss is probably too big. All right, cool. So this would have been another example. So the same way I just showed you guys the other example how I finessed my entry. If I would have put my original entry, because remember, if we draw that little sell zone between the 50% and the opening, right? The fib level that is perfectly in between is going to be the 71%. But unfortunately, the 71%, hold on, let me do this the right way. So if I were to do like this, right, round my number off, 50, stop, so that's 40. But the thing y'all got to realize is, actually, I don't know why the hell, why is it at the 78%? Yeah, I have no idea. What was this? Oh, okay. I always forget. That'd be throwing me off. So the thing that you got, that always throws me off. So I'll be forgetting these. Whenever you pull up a currency pair on a different broker, the pip count sometimes can be slightly different. And this is like an example of that. The pip count on this is like off by like a pip or two, which is why it's not like exactly, because I'm like, okay, this doesn't make sense. It's like, why wouldn't I have put it here? Because this is, but it's like on this one, right? If you guys see on this one, if I move this down to the 71%, it's a 42 pip stop loss, not a 40 pip stop loss. So slightly different, basically the same thing, slightly different. So the reason that I would have actually moved it to the, the 78.6 is because on the other data feed, this is what would have actually given me, you know, a smaller stop loss. So um, all right, but that's pretty much it. I mean, yeah, because you got the entry, that would have been a stop loss, and then we're just gonna target, like I said, somewhere in these fib extensions, because my goal is to be able to have, because if you guys look at this correlation. So if I were to use this, notice how this fib zone that I would like to see the retracement to is also going to be, it's going to have the -27 and -61.8, which are my fib extensions for my take profits for the sell. And those fit perfectly in this retracement zone. So a lot of this makes sense. Like a lot of this makes a whole lot of sense. But like I said, trading, all you can do is make it make sense. It's either going to work out or it's not going to work out. The only thing you can control is getting in the trade and managing your risk. Outside of that, the market is in control of literally everything else. So at this point, we just gotta let this thing rock out and basically just see what it's gonna do. It's either gonna go in our favor or it's not. But we are officially in the trade. The trade is officially activated. And at this point, we just gotta wait it out, thug it out, hope for the best. Oh, okay, Ricky left. Appreciate y'all. Well, Ricky's probably already gone because I'm just not seeing that. But yeah, so we're about to go ahead and call it a night. Let me go ahead and get rid of that. So AED chef. So like I said, I mean, everything as far as I'm concerned makes sense as to why we're taking this. But I mean, GBP JPY made sense as well too. So these are the reasons why you guys don't over leverage on any individual trade. Doesn't matter how good you feel about it. This is what I learned a long time ago. You're gonna convince yourself, oh, this one's finna. You don't know what's finna do what. I'm gonna be honest with you. So if you over leverage, you're going to always hurt yourself. That's why you got to manage your risk. You want to risk 1 to 2% per trade, because it's not about hitting home runs. It's about RBIs. Okay. That's a baseball reference. Some of y'all probably don't even understand it, but you don't want to hit home runs, right? You really just, the goal is to not blow your account. It's not necessarily to make a lot of money, because you're not going to make a lot of money if you have no money in your account, right? But outside of that, I appreciate everybody for being on the call. As usual, I will upload this to my YouTube channel. It will be uploaded Well, it's not gonna be uploaded till tomorrow morning. Because I don't like uploading it randomly in the nighttime because nobody's awake. So I'll upload this sometime, earlier in the morning. But as usual, I appreciate all my regulars for getting on the call. The week is not over yet, so we're gonna keep our heads high. We're gonna look forward to, taking other opportunities. And I'm about to go ahead and hop on this go live session. And maybe I'll see you guys there. So with that being said, it's been your boy Tyree Samuels out, and I will see y'all tomorrow. Peace.